Evolution goes from strength to strength, and it may just have a final big pump in store. Evolution sure stands out with its 8,000% price increase in just 6 years, or a 110% annual return on average. Not bad, but how does it look right now, and how much more can we expect from it technically? Despite this year's Bitcoin focus, I have taken a thorough look at this vastly popular stock, and from a zoomed out perspective, its technicals are as crystal clear as the eyes of a crystal meth user. But first, nothing in this episode is financial advice. These are my own thoughts and conclusions only. And if you appreciate my work and effort, then please return the favor by hitting the like and subscribe buttons. And more importantly, share this episode with others who may benefit from hearing this too. Spread it like wildfire.
Fly, my pretties, fly!
Let's now straighten out what's going on in evolution and what to expect in the near to mid future. In this episode, we will focus primarily on Elliott Wave Theory, and the reason is because they're very clear and because they have so far followed all the rules. For Elliott waves are very helpful indeed whenever they manifest themselves in an obvious way. The problem is just that they rarely do, and once they don't, they rather leave too much room for interpretation, by which they tend to confuse more than they actually help. In evolution's case, I can say only one thing: we're lucky. Starting from the 2015 IPO, we have a clear 5-wave count, of which we're currently establishing the 4th wave. So far this makes perfect sense and is confirmed technically as the 2nd wave hit the 0.5 and then found continuous support at the 382. And as the 4th wave is performing in a textbook manner by establishing a triangle formation and holding up the 236 fib. A normal 2nd wave reaches either the 618 fib or the 0.5. However, evolution is not your average company. Things that trend very strongly tend to show more strength in their consolidations. In this sense, the majority support at the 382 amidst the 2nd wave gave us an early clue of future outperformance strength to follow. Based on the bigger picture, there's another important aspect that needs some consideration. Here's what I see: we have a long internal secular trend right here. And to those of you who watched last week's episode, an internal trend line is one that focuses on the most touches, whereas an external line in this case would look like this, although it would be a technically non-confirmed one as it's only got 2 touches. We then have a primary trend line and an intermediary one, and the only thing that differentiates these lines is what time span they stretch over, as in how many market cycles or mini market cycles they contain individually. And the longer the time any such line is comprised of, the less of an angle it will have. Now, so far the 4th wave respects the intermediary trend line, and the price is in the midst of forming a seemingly triangle formation. This would nicely align with the emerging weakness on the Swedish OMXS30 index, in which it's currently right at the resistance of a rising wedge, and all the while continuously struggling to break above the upper bearish blue line on the daily. Now, if the OMXS30 were to correct in price, evolution can still outperform such correction by correcting with time. For as we know, there are 2 different types of corrections. There are price-based corrections and time-based ones. And as evolution has already continuously outperformed that of the index, a time-based evolution correction whilst the index corrects in price would further confirm the internal strength relations and the overall healthy trend of evolution. Now, if this 4th wave were to play out the way we expect it to, then we should expect a final 5th wave blow-off move. This in turn would statistically be accompanied by an even steeper trend line before the party is over for now. A near vertical line for a final aggressive blow-off move to push the price towards its ultimate target. And speaking of targets, it is actually quite an easy one to calculate, and I guess that's why most of you are here to lick your mouths at the high numbers I'm about to present to you. Now, given that the 4 waves so far have played out in a textbook perfect fashion, we can literally reverse engineer the final target. And the way to do this is simple. So per classical Elliott Wave Theory, the 4th wave bottom should align with the expected full 5 wave structure's 382 fib. And if we draw a fib from the very bottom and halt it once the 382 matches the prospect 4th wave bottom, then we can tell that the ultimate evolution target stands just north of 2,100 kronor for a near 50% more to go on the upside. Naturally, however, this target does assume that the 4th wave bottom has been set already, as in the 236 fib of the 3rd wave move. If not, it would change everything and would equally so disqualify the target thesis of this entire episode. And mind you, we are not here to crystal ball the future. We are here to determine the most likely outcome based on what we know at any one given point. So as long as this 4th wave 236 fib hold up, then 2,100 kronor is a very likely final target. Now, once we potentially get there, as in given that this playout doesn't get disqualified along the way, an ABC correction doesn't automatically mean the stock will crash and burn. No, what it means is that for classical technical analysis, as in how we measure the group psychology of the market in any individual stock or equity, it just needs to cool off, and such cool off is typically achieved by an ABC correction. And mind you, this doesn't have to be too deep either. The main threat in this case would rather be an external one, and one that may and likely will affect evolution in turn. What I'm talking about here is the overall emerging weakness on a macro scale. We are in for the perfect market crash storm, and it is coming whether we want it or not. This means that whenever the macroeconomical dominoes eventually fall, it doesn't really matter how sound and well-oiled any one individual company may be. For people, governments and financial institutions will have less money to spend, and even big company giants will suffer, however temporarily. In this sense, a correction in evolution, and even a long-lasting one, can very well be the result of increased interest rates, which ultimately is needed in order to avoid hyperinflation or even worse, stagflation. Simply put, this means people will have less margins for fun stuff like online gambling after their mortgages and interest rates are paid. And it means companies will make less profits, both from less money coming in and due to smaller profit margins due to increased interest rates, and will hence have to let employees go, which means there will all of a sudden be even less money circulating and less collective purchasing power to benefit industries and companies. So to neatly sum this episode up, so far chances are strongly in favor of a minor price-based correction in the Swedish OMXS30, but given the secular strength in evolution, we may rather expect it to complete its shallow 4th wave correction before being ready for a late summer or early autumn 5th wave towards its technical target around 2,100 kronor. That was all for now. Thank you and goodbye.